What if I told you that each year the US government sets aside billions of dollars available to business owners who are developing new products, experimenting, trying to improve their business? Well, today I'm going to share with you a tax credit available to most business owners that very few take advantage of. And this is not a one-time credit. You can get it year after year. So stick around. You're not going to want to miss this. I'm Rich Smith, and one of the money lessons you never learn in school is tax credits. That's right, there is one called the Research and Development Tax Credit, also known as R&D, that's available to most business owners. So I'm going to dive into all the details on how you could potentially save thousands of dollars annually based on work that you're probably already doing. But real quick, before we get into the details, drop a like for this video. It helps get the word out to other people just like yourself. So a little history. Back in the 1980s, the government started this R&D tax credit simply for businesses to help them research, innovate, and keep all of that work happening here in the United States. Now, let me stop you right there. I know that if you're thinking of like scientists and lab coats with little beakers and everything, that is not what we're talking about. So keep an open mind as I kind of break this thing down for you. Now, flash forward. In 2015, the government made this R&D tax credit available permanently, which means you could apply for it. It's not going away, and you could get it year after year. Also, they expanded it to include startup businesses. So to all my startup businesses, if it's just those first few years, you're definitely going to want to pay attention. And they also made it so that it could include more small businesses as well, because historically, it was really only like large companies who were taking advantage of this. Now, some of the reasons people sort of dismiss it or like pre-disqualify themselves is they think like, oh, this sounds like too complicated. Oh, it's too costly. Or they're simply just misinformed and they don't believe that they actually could qualify. So simply put, if you do any sort of improvements, innovating, experimenting, you use technology, you take those results, you keep working on them, and then you eventually sell that to customers, you use it in your business, then you probably qualify for some R&D, research and development tax credits. So just a few examples, businesses that like probably perform these activities that do qualify and don't even think about it. Let's start with like the food industry. All the brewers out there, wineries, coffee roasters. You know, you're always making like different blends, getting different flavor profiles. Research and development like that counts for your industry. Let's think of agriculture, our farmers out there testing different fertilizers, using different types of seed and seeing what grows. These types of investments in your business, activities you're already doing, count for you. And then I mentioned it before to all my startups out there. So many businesses are using some sort of software development. They're experimenting with marketing. And when you are testing those things, testing those softwares, those algorithms, that type of activity, that type of money you're spending on that can indeed count. Now, I don't want to lose anybody here, so let's just talk about what it's worth, and then I'll leave a link down below in the description. If you want to learn some more, there are people you can talk to help you do this. They are experts and they are here to explain how it works, work with your CPA, work with your tax professionals. But all right, let's talk about what this potentially could be worth. Most companies land somewhere in between 7 to 10% of all the money they spend on research and development. And that is a dollar for dollar tax credit. So literally, if you owe money, it would come right off the tax bill. Also, you can go back retroactively. So if you have not filed for this in the past, they can go back a few years and look at those books and look at what you've spent. And then the really cool thing is that you can also carry these tax credits forward up to something like 20 years. So if you have very little taxes owed 1 year, then you can carry this credit forward. Maybe you have a year where your business is booming and you're spending more, and then you can end up utilizing some of that tax credit. Now, to all my startup businesses, and this means a business that started basically in the past 5 years, you may not have very high tax bills yet because you are just getting going, you're bootstrapping things. Well, you can actually get this research and development tax credit and use it against your payroll taxes. So there's a few other rules about how this works. You can't have more than like 5 million in gross receipts, but basically, if you're a newer business, you can get this tax credit and then literally have it count dollar for dollar against all the payroll that you paid out. We're talking those FICA wages, those W-2 employees. Okay, so moving on, let me give you an example of a company. I want to use a startup one because a lot of business owners or CFOs who are out here searching for information on this tax credit, you're going to be listening to this example thinking, I think this actually applies to us. So there are 3 types of expenses that count towards the calculation of your R&D tax credit. And the first one is going to be wages. Simply put, these are W-2 wages that you pay to U.S. employees, and those wages indeed qualify. Number 2 is going to be contract expenses. So think when you contract out work, independent contractors, they don't let you include all of that, but when you add up all the contract expenses for the year, they let you use 65% of those US-based contractors. And number 3 is going to be supplies. Think about materials. Think about tools. Anything you use that ends up getting, consumed or, thrown away because you're done using it, it's all used up. Those types of supplies indeed count in that calculation. Oh, and I do want you to think bigger. Supplies could be, web-based services. If you're doing design type things, like when you learn more about this, you're going to understand just how much can actually count. So in this scenario, let's say we have a startup company. They have, raised, $4 million, and in the first year they spent like $1 million, right, of their money. They're innovating products. They're bringing them to market. They're testing. They're pivoting. They have wages. They have contract expenses, they have supplies, and when it's all added up, that $1 million that counts towards research and development could get them a tax credit in the amount of $100,000. So again, I'll leave a link down below in the description if you'd like to learn more. Of course, it's always a good idea to do your own due diligence. Speak to your accountant, speak with your CPA. My own accountant doesn't really focus on this type of area, so it's going to be worth it to work with some specialists who can sort of bring everyone together and create that synergy and basically get you money that you're entitled to. All right, big picture key takeaways. The research and development tax credit is something that's available to business owners with US-based employees, US-based contractors who are experimenting, developing, innovating new products, new materials, new services for their business. I don't want to lose anybody here, so I just want you to realize that there are many small businesses, startup companies that don't even realize that the activities that they're doing already probably count towards this tax credit. Again, big picture thinking, you can get back right around 10% annually, and you're able to take that tax credit and carry it forward if for some reason you have lower taxes owed in 1 year. And that just blew my mind. If you've ever heard of, big companies, not paying any taxes, it's advantages and learning about tax credits like this that they're already using, so you might as well use them too. All right, again, if you like this video, please drop a like and feel free to check out my website. It is full of other innovative business tax credits, blog posts, podcasts, you name it. Also, if you're new to the channel, please don't forget to hit subscribe and ring that notification bell. All right, as always, I'm Rich, and until next time.